Hello, this is a tradesight trade recap video for the week from February 2nd through 6th, 2015. I'm going to recap 3 trades that we did this week. We often teach in our trading system that the longer the pattern, the more important it is, the more you need to focus on it, the more size you need to use, and learn how to manage those trades appropriately, because the longer the pattern is, the more opportunity there is for the trade to work and play out at a better pace. So I'm going to recap our 3 top picks that triggered this week. Tuesday, Wednesday, and Thursday, the 3 best trading days of most weeks. We had a top pick each day trigger. They were based on some nice long daily chart patterns. And we're going to walk you through how we manage those trades for our subscribers and show you how they played out. Teach you how these are the types of trades that you should really focus on because they're the highest probability trades in the marketplace. So we're going to start by looking at Costco. This is COST. This is the daily chart. And you can see the nice long base pattern here. We were looking at this trade coming into Tuesday as a breakout over 146.82. That's the high from back in December, and we've been basically basing sideways ever since. We had a strong day on Monday. That's the white bar that you see on the chart right there. All right, so what does this trade do? And let's take a look in bar replay mode on eSignal 12. So we're going to relive the day effectively. So this is Tuesday in 5-minute bars. We're already about an hour, maybe an hour and 20 minutes into the market. Again, 146.82 is the trigger price that we care about. So let's start going forward. And you're going to hear some alarms along the way as some of my signals go off. But here's the trigger. This is the bar that triggers over 146.82, and it's an easy stock to get into for the most part. Whether you're using CFDs or stocks, you can get into this one right at your entry price. You're pretty close to it. Trades a lot of volume. On a $100 stock like this, we're usually looking for about 50 cents. So in this particular case, we were watching a key level called our upper pressure threshold, which is not on this chart. That was at 147.28. So as you can see in the first bar, not only does it trigger, but it moves pretty decent pace and comes right up near that 127.88 level. Matter of fact, the high of that bar, if I put the actual print on the screen, is 147.28. So it actually hit the level exactly. So we suggested that people take a piece of the trade off, and we were able to get out about 147.25. What this does is it builds a cushion for us to now manage the trade in case it stalls out completely, to let it play with the trigger, to let it play with the prior support level. In this case, if you look at the chart, you can see that besides I'm going to draw the 146.82 level. This is the breakout on the daily. That's that blue line. But besides that point, you can see that there was a last point of support resistance created intraday at 146.50. So now that we've sold a piece and locked in a gain of about 45 cents, now we have some room so that if this thing does pull back to one of those 2 levels, we don't have to worry about it. And we can kind of stay in the trade. I would only get out of this stock at this initial point if it were to actually break under the lower of those 2 blue lines. Okay, that's your most recent support intraday. It's totally within range of the trigger. So let's continue to move forward on the chart. Oops, sorry, I did not mean to draw that extra line right there. That's a meaningless line. All right, so we're going to continue to move forward on the chart bar by bar. And you can see we do get a little pullback. We come right under the trigger. Okay, one more bar that comes down very close to retest that 146.50 level. Okay, and then we start to turn up here, and now we're back above the trigger. So essentially we have done a retest of the trigger, not to the penny because it never works out that way. You'd never want to be the guy that has your stop just a penny under the trigger point after you get a partial, because they're going to sweep you out a lot. And so here we get back. So at this point, now I can basically say, yes, if we break under that low that just occurred 2 bars ago, this is where I want to be out of the trade. And if not, we're going to let it ride for a bit. And this one turns up as it should and curls and starts to make a move. Now, it does a little sideways action over lunch, sets off some of my alarms, as you can hear, for various signals. And so at this point, as we're heading out to lunch to go eat, now we can move our stop up. We can put our stop under the low of this little base that the thing just made. So we're right here now in Costco, a stop under that top line. So these lower lines at this point, pretty much meaningless. I'll leave the original trigger in there. Okay, but again, this is a daily chart trigger, and here's where the trade is. Now, what happens from here? Now you can, as long as you've got a stop in place, you can actually go off to lunch or whatever. You know that if you break under that top blue line, you're out of the second half of your trade. It's still a perfectly reasonable gain. But if it keeps going, then we can adjust the stop over lunch or after lunch. And so here, coming out of the lunch hour, this is entering the last 2 hours of play, we actually got a Comer 13 sell signal, which suggests it's an exhaustion signal. It suggests that this might be about all it's going to do. Doesn't mean you just get out of the trade. It's a warning level. So what we're going to do here is we're going to move our stop up in this case. Just say, okay, now that we know this signal's up here, I'm not going to give it much room. Maybe back to 1 or 2 bars back, and that's it. I don't want to give it any more room than that if it rolls over, because that's kind of an exhaustion signal. So it's either got to keep going and ignore that signal, or we're going to be out if it rolls over under that line. Now, I can tell you that top blue line is 148.50. So we're already $1.70 in the money if that's where we stop out of the trade. We're more in the money currently. All right, let's keep moving forward. And you can see that pink risk line from that 13 sell signal. That's going to be a wall, but it ends up breaking very quickly. This is a strong stock today. It's just shaking off that exhaustion signal. Even gets a second exhaustion signal, which is pretty rare, unique to get, the way you have to get those counts to play out. And it's still going. And so now at this point, it becomes fairly easy. Now that you've got what we call sort of a chart that's gone exponential, it's just heading up at a rapid pace, you can simply move your stop to the low of each prior 5-minute bar. So as this bar completes, you put your stop here. As this bar completes, you put your stop here. You get the point. And you just continue to do that until it breaks underneath the low of one of those prior 5-minute bars at a minimum. So that would be right here where you finally get stopped out if you just use that method. That allows you to capture to about $150.25 or so. So that allows you to capture 3.5 points or so almost on this stock. That's if you were really tight and moving your stop up either way. What's interesting is even if you didn't do it that way and you gave it a little more room, it goes on a late tear, runs all the way up here to 154 for the close. And again, our trigger that day was 146.82. So a nice big move. And I'm going to take you back and show you what this daily chart looks like of this after that move occurs. So let me slide the daily chart back into place. And now you can see how far that move actually ended up going. Okay, so it's a big move off of a real nice pattern. I mean, that's a real strong pattern to have. And again, the stronger the pattern, the longer the pattern, the better off you are. Now let me adjust. We're going to go to a different stock. And so I'm going to sort of get this set up and bring this into play for you. So this is going to be an Apple trade call that occurs. And this actually triggers on Wednesday, the next day. This was our top pick that session, and so I'm going to show you what the Apple looked like at the time that we were coming into the trading day, and then I'll show you how it played out, just like I did with the other one. So here's Apple. Again, a nice cup formation over about 8 weeks. We've got a breakout point at 120, which was set a couple of days ago, but it's very near the high from November, right around Thanksgiving. And so it's a nice base formation. Should have just as equal potential as the trade that we just saw, the Costco. They're both very good. But we still have to manage the trade, just like we did with the Costco trade. You don't just assume anything. Not every trade is going to work equally well. So let's keep an eye on the Apple here. This is Wednesday now in 5-minute bars, and you can see as it starts to get near that 120 level. Remember, the trigger's 120. Okay, so here we go with Apple. Now again, we're going to usually want about 50 cents, 50 for our partial on a $100 stock, something around that area. Okay, and if we don't get that pretty quickly, then we have to be a little more active in how we manage the trade. So here we come right now, approaching the 120 level. There's your trigger. We get through. Okay, so now we're in the trade just over 120, and again, Apple's even easier to get into. Traded about 400,000 shares just in that bar, I believe. Actually, more than that, no, millions, 3 million shares. And then keeps going. You'll notice we're getting towards a 13 sell signal. So we want to get near about 120.50 to take half of the trade off. Okay, and here's the thing. At this point, we're heading into lunch. It's still holding above the 120 level. Keeps playing with it a little bit. Kind of give it room to get through there. By the way, we would also use a stop around 50 cents as well, and that would put it actually under this purple line, which is the VWAP right now. So it hasn't come close to stopping out, but it's just holding just above that. And then here's what happens. We have not yet gotten to 50 cents in the money. We're heading into lunch, okay, and we've got a count going right now. That basically means that one more new high print, we're going to get a 13 sell signal or an exhaustion signal. So here we are still sitting on the trigger, still just kind of sit. So what we end up doing here is now that you're over lunch and this thing's just not working, we kind of gave up on the trade right about here. Okay, it's just something that wasn't working out. We were able to close this trade out about 10 cents in the money because there just didn't seem like the potential. We're 1 bar away from a sell signal. We haven't even gotten to a partial. It's been an hour over lunch. So we were able to close that trade out at 120. And what's interesting is it did come back later in the day and try again, but this is too long to have to hold on to a stock, as you can see. And what's interesting about this one is, for whatever reason, it just didn't have the oomph. It didn't move, didn't get going. But if you go and you look at the daily chart and slide it for the next 2 days, as we got to the end of the week, the stock still had not gotten anywhere. So, again, we're just trying to get in, capture the initial move, hope it turns into something bigger because it is a massive breakout. And so in the case of Costco, it worked great. And in the case of Apple, it didn't, but we actively managed the trade and actually didn't get hurt. We actually made a little bit on that particular trade. All right. Now, the next piece is SIMO, S-I-M-O, and here's a look at this one. This is Thursday now, the very next day, and again, this is our top pick. Why is it our top pick? It's our top pick because it's got such a great pattern. Look at this one. This is technically, to me, even better than the other two. Why? Because it is what? It is longer than the other patterns, and we talk about the fact that we like these trades. The longer the pattern, the better the results. So here's a look at SIMO. And this is a nice cup formation. This is about 5-6 months long. It came from $29 to $29, $29 in September to $29 4 days ago here on the chart. Okay, and so let's go ahead and slide the 5-minute chart into place and take a look at what actually happened. So these are the first 2 bars of the day, effectively lined up against the 29 level, the first 2 5-minute bars. So again, it's when we go through 29 that you want to get involved in the trade. And so here's the next bar where we did get in, and again, this thing trades 100,000 shares in that bar right there, so it's not a hard time getting into the trade. Now, this is only a $29 stock, so usually we're looking for 25 cents or so for a partial. That actually happened very quickly on this, which is all right. I mean, we could, as long as you let this thing make its initial move, you didn't have to just lock in 25 cents because it went so fast. You can get a little more than that. And then how do we manage this trade? What's the potential here? Well, let me zoom the chart down a little bit so you can kind of watch this thing. I just, what did I just do there? I just jumped out of replay mode. All right, so here we are where we were supposed to be. And what you can see is, as it starts to play out, we've got an easy partial, right? And it's going to keep moving forward here. We're 11 bars up towards a what we call our Comer exhaustion or sell signal. This is 12 bars right here because it's a new high towards that count. And this is going to be the 13th bar. So at this point in time, we were exhausted. Again, that doesn't mean you just sell it, but you're definitely going to move your stop up, maybe under the low of the prior 5-minute bar, which we just broke here, or under that VWAP, which is the purple line in this particular case. But again, almost a point from $29 on a $20-ish stock, $30 stock, pretty fast, made a good move in an hour. And so you just manage the rest of the trade here. Here's that 13 exhaustion signal. And as you can see, you can hold it and get out of here anywhere you want along the way. But that 13 signal is pretty much it. That's the end of the stock, at least for the trading day. That doesn't mean it didn't continue higher or won't continue higher after that. And you can see, as I show you the daily chart, it actually proceeded through to 30 that day, and then it's still playing with that level, but definitely holding above the 29 trigger point. So 3 trades. All 3 of them are top picks each day of the week, Tuesday, Wednesday, and Thursday. 2 of them worked great based on their price level. Costco was the bigger winner. I think SIMO was the more constructive pattern, but that doesn't mean it has to be the bigger winner on a percentage basis. It still worked very clean and very technically. And then Apple, which we managed well, didn't really do much despite the pattern, but we ended up doing all right with it. That's how we trade in a nutshell at tradesight. Obviously, there's a lot of other parameters that we look at, but I thought that would be useful for some of you to share. And I hope you have a great trading week. If you haven't taken a trial of our services, please come check us out. We can help you make money in the markets.